Hi again. Numbers are the language of business, and if you can't speak the language, how do you understand what's going on? As we safely exit the COVID maze, now more than ever we need to have a handle on the numbers. Otherwise it could be out of the frying pan into the fire. I also guarantee that if you implement what I share in this video, you will pay a lot less of one particular type of tax. My name is Kevin Gallagher from Mental Performance Coaching, and we help business owners take control of their business so they can have more of a life. Welcome to another tried, tested and proven tip. Firstly, make sure you're looking at and interpreting the numbers regularly. Daily is better, weekly at the most. Now let's deal with that tax saving issue. The headline taxes that we pay as business owners are income tax, value added tax, VAT, and corporation tax. But there is another tax that for most of us is probably the most costly tax of all, and that's stupid tax. As business owners, we invest a lot of time doing stupid stuff, and it costs us untold amounts. So here are some numbers you might like to consider tracking that will result in you paying a lot less stupid tax. Your hourly rate. Now I'm going to presume you're the highest paid person in your business, and if you're not, that's a whole different discussion we need to be having. Now if you were to list all the jobs or tasks you do and then look at that list and ask yourself, how much would I pay someone to do some of those jobs? If it's below your hourly rate, you're paying stupid tax, because saving a wage could be costing you a fortune. Secondly, you need to know your break even. How many sales do you need to make at your average order value on a daily, weekly, monthly, quarterly, yearly basis to break even? Knowing this number will help you make far better choices about the activities you need to be prioritising. And I'm going to presume you've produced a budget for the coming months, and at the bottom of that budget you should have a profit figure. Now in most businesses, profit is just an accident. It may or it may not happen. So what I suggest you do is now take the profit figure from the bottom line of your budget and now make it part of your fixed costs. And now because your costs have gone up, your break even will have gone up. But you're safe in the knowledge that if you hit that break even, you will be profitable. Most people believe cash is king. If I ask you how much cash you got in the bank, you'll be able to tell me. If I ask how much will be in the bank 11 weeks from today, I might get a lot of blank stares. So if you believe cash is king, show me a cash flow forecast. Now, but Kev, that won't work in my business. Nonsense. Make it work. And if you want a tool to help you do this and a video showing how to use it, just reach out. In terms of cash, you need to be really clear about your cash conversion cycle and have in place strategies and disciplines to reduce your cycle time. You need to understand your profit margins, and in particular your estimated versus real margins. And what I mean by that is, for instance, you may be given a price up front for a product or service. When you look at your estimated cost after you've delivered the product, I guarantee you'll find discrepancies. Find out what caused those discrepancies between your predicted and your actual cost, and then put in place systems to eradicate them. Also on margins, consider pointing your marketing towards your higher margin products, or even upselling through bundling and bolting on lower margin products to increase the product perceived value for your customer. And I want to come back to budgeting. You've set a budget for your present reality. Your costs should be in line with your present sales. You've got to be realistic. And if you consider pre-COVID, for those of you who had staff, almost certainly you just go out and employ a bunch of people and then grow your sales. You would have done it incrementally. Grow your sales, then bring someone on. Grow your sales, then bring someone on. And being realistic, that's how you're going to have to unfurlough people. You've got to be selfish here. It's company first, people second, sadly. Which leads me nicely into my final point. I'm often asked, what type of employee should I be employing? Should I be looking at skills? Yes. Should I be looking at attitude? Yes. Those things are definitely needed, but in truth, there's only one type of employee you should be looking for, a profitable one. Now, if you don't like doing the numbers, get someone to do them for you. someone who really knows what they're doing. For instance, your accountant. Ask for help. Now you might be thinking, well, that's going to cost. Firstly, good, because that gives you skin in the game. That means you're more likely to do something with the information. Secondly, replace the word cost with investment, because what you invest getting this information will save you a fortune in stupid tax. It only works, so give it a go. Take this from theory to practice to mastery. You'll thank me later. If you've got any comments, drop them in the comments box below. Share this video with anybody you know would benefit from seeing it. Thank you for taking the time to watch it. I'll see you in the next one. Now go out there and make it a cracking day.